Why do some Bitcoin treasury stocks explode and others don't? Great question, because I've built myself a small list of equities that I'm following. As I hear an announcement that this company is going to be purchasing Bitcoin, or this company is going to take on a Bitcoin strategy, you can go and see the businesses that UTXO management have invested into. You can go and see, there's content you can find essentially, and that's a good website. I just cruised over, Bitcoin Treasuries Net. Basically, the traditional equity investment lens is no longer fit for purpose when it comes to Bitcoin treasury plays. And so he touches on a couple of things here: Bitcoin per share, a multiple of net asset value, and Bitcoin yield. And these are all different metrics, essentially, you look at to analyze a company and how valuable do you think it is today versus what it might be tomorrow. He puts a framework here called the FIT score. So you can go and start analyzing equities and see, okay, how does this actually fit in there? And then this is what really hit home for me about why this is interesting. So Semler Scientific, I've watched their progress from some content. I've been following the stock, and it's like, okay, well, they've bought a lot of Bitcoin, but the equity hasn't really moved. And it's like, okay, why? And Mark clearly points out it's because the market still thinks of Semler Scientific as a medical business, not a Bitcoin company. So in spite of the fact that, like, if you can see here, this thing says value per share model fit, the MicroStrategy is off the charts at 98% according to the model he's created, whereas Semler's down here at 45%. It's like, okay, well, maybe that's why you don't see the same kind of upside from this particular equity, Semler Scientific. So he basically lays out a framework that he's created for finding the equities that he actually want to get involved in. And at the very end here, he talks about a playbook for investing in the best Bitcoin treasury companies. So, okay, cool. This is all super interesting. I want to learn more. Now, this email also came through, again, like it's the beauty of email marketing. You share your email with someone, you get all this value. It's quite amazing. Mark is also a partner at the Bitcoin Opportunity Fund, and he shares here a really great story. So, a lesson that almost cost us millions of dollars. Let me find the title of the email. This is what got me. How I almost lost on a 7,000% winner. You're like, whoa, shit, that wouldn't be ideal if you missed that. So they invested in Metaplanet. And interestingly, within just a quarter, so 90 days, they were up 1,400%. It's like, okay, well, we've done a 14 bagger. Surely we take some money off the table here as a professionally managed fund. Exactly what they did. But then it just carried on. It's like, what the hell? It did a 7,000% return, 70 times, 70x your money. Imagine if you'd hit that Metaplanet stock just at the start. That's wild. Publicly traded equity, I might add. This is not an altcoin that's been spun up by a spurious group of people based God knows where, with a bunch of marketing material that's dumped on a ton of Telegram groups that are pumping and dumping this thing for insider benefit and then rug pull. This is a publicly traded equity on the Tokyo Stock Exchange. What the hell is going on here? Now, Metaplanet did a pullback in terms of price, and they managed to buy back in at roughly the price they sold at. And because they were watching it every day, they're obviously professional investors, they were learning more and more about what they were looking for. And this particular experience is like, well, hang on, so price to earnings ratios, debt to equity, traditional cash flow, it doesn't fucking work. So what do we need to look at? And he starts talking through here why it's BTC yield, days to cover, modified net asset value, and Bitcoin torque. And so this is where his big presentation, the Bitcoin Treasury Scorecard, comes into play. Like, what are you actually going to look for in these companies? And, why it's important. It's like, okay, well, Mark, you have my full attention here. This is A, something that's in line with my kind of wider Bitcoin ethos, but B, this is potentially a way to outpace the Bitcoin hurdle rate. Cool. Okay, let's learn more. So I downloaded a scorecard. I 100% you guys go out and do this. Now, this is a pretty big document that I'm not going to go through in specific detail here because it's not the moral of the story. It's like, this is great learning, right? I, as a retail investor sitting at home with my own money going, what do I do to maximize my purchasing power potential? And it's like, of course, I'm looking at different opportunities. Like, why wouldn't you, right? And this works really nicely because, as I've already touched on, I love this blend of A, the Bitcoin focus, but B, the low liquidity risk. Because you're not locking your money up. It's a publicly traded equity. It's like, if something goes wrong, you should be able to get your money out.